FMIS in Vienna. Thank you for joining us. I will be the moderator for today. First of all, I want to thank the Vienna Endurance Group for hosting us and for this great view we are enjoying here today. The first speaker we have today on business post-COVID is John Chisholm. John Chisholm is an entrepreneur, CEO, and investor. He's a pioneer in online marketing research, has founded and served as the CEO and chairman of Decisive Technology, which is now part of Google. He's currently the CEO of John Chisholm Ventures, which is a startup advisory and angel investing group. John, the floor is yours.
Danke sehr. Meine Damen und Herren, es ist für mich ein großes Vergnügen, hier mit Ihnen Free Markets zu sprechen. Ich wünschte, dass ich diese ganze Aussprache auf Deutsch geben könnte, aber leider das ist nicht möglich, weil ich nicht so viel Deutsch kann. Aber vielleicht nächstes Jahr. Our topic is business post-COVID, and there's so much to say about it. Let me just focus on three topics. One is how has overall business activity been affected? Two is who are the losers and winners? And I reverse the normal order of winners and losers because sadly most of us and most of the economy has been losers rather than winners. And finally, how has business changed? And how is it likely to continue to stay changed in the future? Well, first of all, overall business activity. Just very briefly, according to the U.S. Congressional Research Service, in 2020, which was the worst year of the lockdowns, the global economy shrank by 3.2%, global trade shrank by 5.3%. Since then, the U.S., even though there have been distortions in both directions as a result of the lockdowns, the U.S. economy overall had substantially recovered by the end of 2021, and in fact was experiencing significant labor shortages and still is in the U.S., due in part to formerly employed workers not returning to the workforce. And during the Q&A and discussion, we might talk about some of the disincentives that they've had for returning. Globally, recovery has been faster in higher income countries where vaccinations have been more readily available and slower in lower income countries where vaccination rates have been lower. Now, who are the losers and winners? Well, I'm going to categorize them into four groups: the major losers, the lesser losers, the relative winners, and I say relative because they're less absolute winners than they are relative winners to the major losers and the lesser losers. And then there are some major winners. So who are each of these? Well, first of all, the major losers are, well, they include small, undercapitalized, so-called non-essential businesses. These are restaurants, mom and pop retail stores, tradespeople, independent contractors. These smaller businesses don't have the wherewithal, the capital, the financial base to keep going and they lose customers and can't open their doors. In my hometown of San Francisco, 40% of restaurants have gone out of business. Another major loser is travel and tourism, and we will hear more about that from my distinguished colleague and friend, Amir Shani, in one of the later report. Lesser losers are brick and mortar retail chains who were deemed non-essential, department stores, furniture stores, apparel, sporting goods, you name it. They closed, but They generally either had the financial resources or access to capital so that they could survive the lockdowns. Who were the relative winners? Well, these, and this is a very modest bar for winning, but businesses with knowledge worker-intensive workforces, whose workforce can work from home and who could thus continue operations even during the lockdowns. And those include IT, banking, insurance, consulting, engineering, marketing, architecture, and design firms. And I double-checked with my friend Peter Tiering to make sure that I was putting insurance in the right category, and he agreed with that categorization. Thank you, Peter. And then who are the major winners? Online retail services such as Amazon, online delivery services such as Instacart, online conferencing services such as Zoom, online education services like Coursera. All of these, they can address the needs of so many customers, whether individuals or businesses who were locked down during the pandemic. Other major winners were brick and mortar wholesalers and retailers that were deemed essential. For example, Costco, at least in the US, is how companies were categorized. Back-end information service providers, such as, again, Amazon, Microsoft, IBM, Apple, that provide the back-end infrastructure for as so many services moved online, and package delivery services such as FedEx and UPS. Global supply chains were substantially disrupted, especially as China, in particular, adopted and continues to maintain draconian lockdown measures. How has business changed? Well, all parts of the digital economy have received a major boost, both in customer acceptance and technological advancement. We see that online retail, online healthcare, online education, online entertainment, all of these have enjoyed growth in their market share of their overall market. And online elements have been integrated to a greater degree now in conventional brick and mortar and in-person transactions. So, for example, ordering your lunch online from your corner sandwich shop. So even brick and mortar businesses are integrating more and more online activity into their businesses. The workforce has become more hybrid, and that seems to have at least some lasting effects. That is, mixing in-office work with work at home for business professionals. Maybe it's even a new standard for many companies in high tech, at least we see that. Larger retailers, such as Amazon, who can afford to automate operations with investments in robotics and enterprise software, thereby increasing productivity and scalability and reducing costs, have gained an advantage during the lockdowns. An unintended consequence of the lockdowns are that they've made well-capitalized, high market cap companies even more competitive and valuable, and less well-capitalized companies less competitive and valuable. The less well-capitalized companies that can't afford to make the same kinds of investments in robotics and automation. So, as so often happens when politicians, rather than markets, drive such decisions as which products, services, suppliers, and businesses are essential or non-essential, the rich become richer and the poor become poorer. Increased inequality is so much a problem of our own making. Well, those are just a few thoughts to kick off our panel discussion. And now I look forward to hearing your comments and questions and those of my fellow panelists. Thanks so much.
Thank you. I now want to invite our two panelists. First of all, Babara Corbin. I'm sure I wouldn't have to introduce her, but I still do. Babara Corbin is the Vice President of the Austrian Central Bank And as most people already know, she's also the director of the Austrian Economic Center and the president of the Hayek Institute. She's also a professor of Austrian economics at the University Donja Gorica at Montenegro. And also I want to introduce Gerald Netal. Gerald Netal worked in the international sales and logistics before entering the insurance and risk management industry. He worked for the Risk Consult Group on the management level, focusing on combining technical, financial, and economic risk management. Currently, he is heading the corporate department of the Vienna Insurance Group. Please join us on the panel. May I ask Babara to start?
Okay, thank you very much, Martin. Thank you very much, Dr. Kieran, for hosting us here. Thank you to BIG again. And I'd also like to thank our team here in Vienna for organizing the roadshow. I've just been on tour with John and with Anya and with Kolm in the past week. We were in Moldova and yesterday in Yash. Actually, we had to drive by car to Chisinau because the airspace is closed. And among food for thought, we were of course also delivering medication and other supplies that are happening there. But the roadshow is on again and live again, and that's the good thing about it. And today, business after COVID. It's not only business after COVID; it's business during geopolitical tensions. We've had another external shock that nobody had actually ever thought would come, as was already mentioned before. But I would simply provide you with a couple of thoughts that I had. There are 6 challenges that business, enterprises, management, board members need to face these days. And of course, they also reflect, they should be reflected by politicians. One of them is the labor market. There are various reasons why we should look at the labor market, not only because of the consequences of lockdowns and home office. They have consequences for both employers and employees. The productivity, or rather the lack thereof, that we see these days. Then of course there is new demands, I would rather say entitlements, by some employers. We have the right not only to keep the office in our companies, but also the right to work from home. And this also has some questions with regards to the regulatory body that we need to see. Then there is the shortages of labor supply, especially in the tourism industry, but in many others, and we will discuss that later. We see hybrid working, desk sharing, and all those things actually need to be discussed for enterprises. But this is only one thing. What is actually most challenging is the costs of all COVID measurements, and what governments across the world, but also in Austria and in Europe, have put on the table. It's not only the money, the amount of money that is being put into circulation to kind of solve COVID, which cannot be solved with money, but luckily with other tools and means. But somebody has to pay the price. And it's not only the enterprises, it's also the taxpayer. And there is another specter that is hunting Europe, which was actually also hunting Europe long before. The specter is called inflation. And we were discussing inflation already last summer during the roadshow, and before that, many economists actually thought about it. What will happen if we put the Green Deal into practice for real, without pricing in the extra costs of energy etc., and the new technologies. So it hit us already in Q3 last year. It was visible. People mentioned, or actually some economists mentioned, it would be transitory. Right now, it's obviously here to stay at least for a while. Many central banks have reacted in a different way, whether the Fed has reacted differently than the ECB has. Some European central banks, which are not in the Eurozone, have reacted beforehand, but those things also need to be taken into consideration. I already mentioned productivity, and I mentioned the Green Deal, but there's also one thing that we need to think about, and this was a big positive effect of COVID. This was digitalization that you mentioned. So it's not only all negative, but as an economist, I'd rather look at the numbers and figures and the lack of growth that we see currently, although we have to admit that we had a recovery in January and February, but then when the war hit again, everything went down again. So hopefully no external shocks, but we are in a tough mode, not only for the enterprises but also for the businesses to go back to track. It will be hard, and we have to rethink a lot.
Thank you very much, Mr. Netal.
Warm welcome from my side as well. May I just not to comment on you because I agree with everything you said, but maybe turn it in. You can hear me, yeah? Maybe I turn it into the sense of insurance business, because what is actually the consequence of inflation, for example? We are facing a situation where, on the one hand, the inflation obviously increases our claim costs, and we have always a time gap between collecting premium and paying losses. This is one aspect, and it's tremendously this dynamic. Meanwhile, this is probably on the one hand side a really hard topic for us as an insurance business. Obviously, we have also the asset management perspective. And the highest successful on this part of the game. I think these are the, let's say, economic points of view when it comes to inflation, and some other trends you mentioned, like for example the pandemic situation and cybercrime and so on. There are some risks and political risks which are hard to bear from an insurance point of view, because there are some criteria that have to be met to be able to be insured from a conservative point of view, which is actually that we have something like a random or randomness of the happening of the event. We have to have a clarity on time and movement of an occurrence and the result, and it has to have an independency from one event or one risk to another. What do I mean? That actually we have the problem that some of the trends which are addressing our societies are not manageable by traditional insurance companies, like political risks, like commute situation in some cyber dimensions, but also when it comes to weather events. And the problem is that we have this situation that we do not have, let's call it a diversification within our portfolio. I think these are the problems we're facing as an insurance industry right now.
Thank you. Could I ask John, do you want to respond?
We keep interest rates artificially low to boost the economy. And whenever there's an intervention in the marketplace, I think it's really important to ask who pays the price? Who pays the price for artificially low interest rates? Well, they're poorest people lowest income people in the country because those people cannot afford to play the stock market. Very often they're living paycheck to paycheck. And they need a conservative, reliable, safe haven for their savings. In years gone by, that was a savings bank. And today it's commercial banks, but the interest rate at a commercial bank is maybe 0.5% or 0, or maybe negative here in parts of Europe. So a policy which is supposed to help perhaps the poorest or lowest income people in the country is actually hurting them. And now we see, as a result of the huge amount of spending we've had in the U.S. in the last 3 or 4 years, it's coming back and we're paying for it through inflation. And it's really deliciously ironic that, the inflation is blamed on the war in Ukraine or Russia cutting off supplies. The inflation started well before the war did. And who was paying the price for the inflation? Again, it's the lowest income people in our country. People who are on fixed incomes, maybe the elderly, people who can't afford, again, to play the stock market, take advantage of the increase in stock prices that the market has enjoyed. So, again, it should give us pause about any form of intervention in the marketplace, distortion of the marketplace, and should remind us how absolutely critical a stable currency is. The U.S. in particular, we're supposed to be the reserve currency of the world. We're not doing our job at all. Our Fed is not doing our job, is its job. Here's a cost of inflation that people just don't talk about, but it's a very real cost that affects all of us. It muddies the signal of where there's demand, and it makes it harder to make well-informed investment decisions when there's inflation because of the noise which inflation represents on the signal, which should be crystal clear, that prices give us. And so that malinvestment, misinvestment that results from not having clear market signals through prices is something we should also bear in mind as a cost to inflation. Thanks.
Thank you. I just want to make a quick comment on that because it underlines the point, I think. 6 months ago, we had producer price inflation in Austria at 15%, and it remained there about until March. And now the latest figures are at about 25% for producer price inflation. I might want to ask a question to all of you regarding inflation and what the government did. Did it actually in some way help the economy, or was it all bad?
What, inflation or the amount of money that is being put into circulation? All the measures. Okay, let's just quickly go where we should be and to be in a common part. What triggers inflation? It's shortages of demand, supply, shortages in general, and of course we have, and this is what our Austrian Central Bank has been calculating, also the climate change policies have also triggered inflation, not to the extent that luckily we have feared, but it still does trigger inflation. So, and I would like to add one more sentence to what John has mentioned. in the end, it's the taxpayer who will pay, and it's the taxpayer via the entrepreneur and corporate tax rates, or it's the individual via either his income tax or via his subsidies to the government and social security, etc., etc. So, and these are the people who pay for all those subsidies, that don't have a price tag on. And that's, I think, the difficult thing. If you sell an insurance, it has a price tag on. The consumer knows what he gets for it. But we, in the end, don't. And now we have the specter of inflation coming up. And I would also like to mention something that we should also consider. The concept of secular stagflation that was put into circulation was discussed first in 2016 by Larry Summers, when he said, governments have not done their homework, there are structural imbalances and structural reforms that have not been done. And to be honest, in Europe, many homeworks have not been done. Those structural reforms have not been put into place. And now we pay the price in many ways, not only because we're lagging behind on that front, but because of the two external shocks that we have just seen and many other things. So I didn't want to get too long, but I just wanted to throw that into the debate because this is what needs to be considered as well.
Maybe I had just maybe a little provocative statement, because you said that there's a lack of supply. But it's maybe sometimes also that the demand is too high, which is obviously the other side of the coin. And just to give you a little example what I'm talking about, in 2021, in September, there should take place a large fair in Austria about constructions, actually, and it was cancelled. And the reason why it was cancelled, it was not Corona, it was actually that the order books are full. So, and this is affecting us tremendously as an insurance industry. Why? Because if one of our clients has a claim, he's not even able to repair. Yeah? So it's the question of not only on costs, but it's a question of availability of construction materials and machinery and so on. And this is tremendously increasing let's say the replacement time and the time to come back to business, which is obviously or hopefully insured as long as he is with us at least. Yeah? But there's an additional perspective on that point, because if your time back to market is too long, then you're actually losing the market. Meaning, even if you are paid and your replacement costs are taken over by the insurance company, also you're paid for the business interruption. The problem is when you are back to business, you don't have a market because somebody else closed this gap. And if you take this into account for an Austrian economy, which is a SME economy, where we have a lot of companies running a single plan. If you take this into consideration, the market is away, there's no chance to get back. And I think this is also another point of inflation in the supply chain.
Your question was, aren't there some benefits that came out of all of that spending? And the answer is, I'm sure there are. And we need to do a systematic assessment of the cost and benefits after any initiative, and we just are not doing that. And from that we can learn and make better legislation and policy in the future.
Thank you. Before opening for questions, I may ask each one of you what you think is one of the biggest opportunity now for business after COVID. I think we focus very much on the problems that COVID has brought with it. And maybe we could also focus on what the opportunities now after COVID for business could be. Let's put a positive spin on it.
Well, something that immediately comes to mind is how AI is becoming more readily packaged and accessible for purchase or license to enhance any company's products or offering. And even if a company is not particularly technology savvy and has a large technology development team, more and more you can acquire AI off the shelf that you can adapt to whatever your product, service, or processes are, and use them to make smarter, to streamline, to automate whatever business processes and offerings that you have. So I think that's one opportunity.
Thank you. For me, it's quite obvious and clear. One thing is digitalization, which comes together with artificial intelligence, and the second point is that we have a technology change coming in respect of environmental solutions we need probably, and this gives us new risks and therefore new opportunities.
Obviously, those enterprises that have not lived on subsidies and that have survived without subsidies know that they can do it, that they can manage, that they can survive. So from a competitive perspective, I think this was a very good thing. Second thing, creativity, how enterprises immediately had to adapt and get out of their comfort zone and survived and proven that, again, the responsibility they share and they have for not only their employees, but also for their customers in general, worked out. And lastly, I think that to quote Hayek, the pretense of knowledge in society was brought to everybody and made people aware that there is no such thing as full information, and we must not be arrogant and think that we know everything, but we should rather be humble and adapt to new situations and be creative to find solutions.
Thank you. Well, on being humble, we humbly accept your questions. If there are any, do I see any questions? No, not yet. Well, okay.
Hello, my name is Manfred Kainz. I have one question to the whole panel. If we compare the written down responsibilities of the European Central Bank, and we compare this with the real world, the real situation we have. You mentioned inflation and interest rates. If you three on the panel would write a letter to Mrs. Lagarde or the whole board, not only the woman, what would be your message to them, to her and to them?
I'm going to defer to my European colleagues.
The potato is being passed. To make it simple, we could say, read the Austrian economists. I would refer to Karl Menger, who in 1871 published his book, The Principles of Economics, and who in 1907 had a dispute with the German law professor Knapp, who was the inventor of MMT, modern monetary theory. It was called differently back then, but Menger had a dispute, a truly academic, wonderful dispute by really tearing him apart, that this thing does not work. So this is an old story, it's over 100 years old, and some economists still, or leading economists in central banks have not read it. They should read that because it's still true. And short, go back to normal, rise interest rates, not run out of the purchasing programs. This would be the advice. And read Menger. I think this is the easiest answer.
As you asked the whole panel, I think I'm not arguing from a technical perspective, but I would ask for I think a sustainable is probably a good word, a sustainable and not a short-term perspective, but a long-term perspective approach. And I think this includes several things, and also not to address things which are right now on the table, which are maybe in kind of common understanding, but to be have a more visionary approach, and I think this is what I would ask for.
Yeah, Olivier Szalowski. I have a question. The topic was addressed by all of you briefly in different ways regarding geopolitical risks, but especially to Mr. Netal, because you mentioned it in regards to how it's affecting the insurance business. And I'm very interested to see your perspective, because we have clients who are players in international insurance business, and I would like to get your perspective from your insurance business, how in regards to the geopolitical risks you see and you're affected by, you might call it economic statecraft, or I prefer lawfare or financial warfare, specifically talking about sanctions. So in regards to sanctions, how are you affected by like the US Treasury and especially designated nationals and similar sanctions?
May I answer it in two dimensions? The first one is quite short. Political risks are not covered. Yeah? So this is the only impact we are facing is an indirect impact because of economic developments. When it comes to our clients, at least from an Austrian perspective, we are facing, or we are seeing actually clients who say, okay, we stay in these critical regions. Others are definitely removing from those areas. So this is what we are facing. And from an economical point of view, meaning what is the turnover with our clients, it varies. Yeah? There are winners and there are losers. And your question of sanctions, I mean, they definitely hit us. So we are facing several problems. Problem one is that part of our business cases are not present anymore. We are facing a problem that we are not able to serve our clients worldwide, what we used to do in the recent past. And we are facing an additional problem, which is not obvious on the first stage maybe, but in insurance business it's very much also reinsurance involved, meaning the spread of capacity and the allocation of capacity and capital. And if there is there is obviously a gap, but when the gap gets bigger between European sanctions and US sanctions, this is really a problem for us, because we sometimes use US capital and we sometimes use European-based capital, and if they are not in line, this really hurts.
Other questions?
Yes. My name is Christoph Lebel. I'm a financial advisor. And my question to Babara Corbin is, to my mind, inflation began with Draghi's whatever it takes strategy. And we have this inflation up to now. And now we see the results, which are presented to us by a decrease of buying power. You get 2 digits decrease of buying power a month sometimes. And it starts with toilet paper and ends up with cars. So that usually leads to unions that want higher wages, and enterprises that cannot deal with this. And in the end, we have full books in the enterprise and nobody who is willing to do this. And they all want the state to work. So what is the way out from the point of view of the central bank?
Well, I can answer the question from a point of view of an Austrian economist, which is believe in the achievement principle, believe in competition and in self-responsibility, and allow enterprises to work within the rule of law and limited regulation, and of course limited taxation, because there is one famous US president who used the term starve the beast. If you don't have much tax revenue, you cannot spend that much. This is one thing. So use the money wisely and put the price tag on it, which doesn't mean that you don't help those in need with social security systems and whatever is needed, but allow also, and I am a big fan of private pension systems and insurances, and we should support, for example, the third pillar, and which we have not in Austria. Not to the extent that it could be done. We have not developed our financial markets to the extent that it could have been developed. And we're still lagging behind, so there are many opportunities. So this is the Austrian side. And from a central bank position, I would say, as Draghi said, we will do everything we can to solve the problem. I'd say kicking the can down the road doesn't help. And we've seen the amount of money that has been put on the pandemic, on the recent PEP programs, on APP programs, etc. All those purchasing programs, you may call them whatever it takes. They have different names. But when we saw the first ones in 2013 coming up when the European Stability Mechanism was started, things started to get different. And when you have a perspective as an Austrian economist, you view those things more critically than obviously others. And then the big issue that we see, and that obviously will hopefully be taken care of at the ECB board, is the models. That certain things are being, calculated and looked at. And if the models don't meet the current situation, then it doesn't matter. Then you can have nice models, but they don't reflect reality. And I'm afraid this has been the case for a while. I know that, for example, our representative at the ECB, Professor Holzmann, was definitely going after the remodeling. And unfortunately, COVID came in between. So another good reason to open the PEP program. The thing is that we've seen is just that the amount being in circulation, being put on the table, is, for example, much, much higher than the amount that we've seen after the so-called financial crisis when it hit Europe. You can add a couple of zeros to that. And that's the dangerous thing. So getting out of that spiral is now the main task. But trust me, there are probably people who would rather continue these policies because it's easier than going back to reality. And also, and this is the last sentence, sorry Martin, and also sticking to the good rule that monetary policy should totally be separated from fiscal policy. And this has been put in one basket. I think many politicians do not understand that their task is simply fiscal policy and they should keep their hands out of monetary policy. And that is, I think, our task here to also spread the word and spread those news.
Thank you. One last question.
Hello, my name is Thomas Rath, and my question
is you mentioned the rise in inflation we all seen over the last months and also years. So with the rise of the new technologies like the distributed ledger technology, there we have a massive counterpart, so to say, because there we have some deflationary assets or projects, and a lot of investment firms and also companies going massively with capital inflow in there in the next, let's say, 10, 20 years. So there we have basically those two different aspects where now we have inflation on the one side, and now the project was deflationary tokenomics. So how is it addressed from the central banks? Because the CBDCs which are planned are not really going in the way we want it all to have. And also it's like for insurance companies, it's also a massive disrupting technology, I would say. Thanks.
Well, you mentioned cyber currency, blockchain, and the promise that those new technologies hold. I sense bullishness on your part about them. I share your bullishness. Blockchain has tremendous potential. The way I think about it is, imagine a technology that assured that you could trust the party that you were transacting with. You could trust that they were who they said they were and that they would do and fulfill whatever they committed to doing. Well, with a technology like that, all kinds of new things are possible. For example, think about Uber and Airbnb today. Those are very popular apps as they are, very popular news online services. But with blockchain, there's the potential for the intermediary, namely Airbnb or Uber, to be taken out of the transaction. And so the extra premium that we currently pay to those third parties goes away, and we transact directly with whoever is the provider of the service for us, either the lodging or the transportation or what have you. As far as Bitcoin goes and other cyber currencies, I don't know much about anyone's other than Bitcoin. Of course, the regulatory hurdles that it's facing are significant and growing, but the fundamental fact that it cannot be arbitrarily inflated, I think, gives it a great advantage over conventional currencies. And I haven't followed its performance and pricing lately, but I would expect that it would hold its value while we're watching the fiat currencies decline in value. And I don't know how many people saw the news this morning, but the US inflation rate just reached an all-time high for the last 40 years of 8.5%. We were upset last month that it was 7.9%. It's now crept up to 8.5. Who knows where that will stop? So I do think the advances that are being made that you're talking about in crypto and blockchain are a bright spot in the midst of everything else that's going on. And I hope that our governments don't unduly limit the use of cryptocurrency. Of course, it is risky, and it is a challenge to conventional currencies, because if everyone were to start using digital currencies, then governments wouldn't have as much freedom and flexibility to tax invisibly as they do through inflation.
Thank you. Anybody wants to add?
Maybe I just can give you a little comment, which is actually that we are using as VIG blockchain. We are having some smaller business cases where we are trying to find how to use blockchain in insurance business. And one case I can mention here is that we try to, or we do already, issue certificates for transports on a very, let's say, fast and reliant basis.
Okay, thank you.
One sentence, not every digital currency is a cryptocurrency. And this is especially true when it comes to central banks, who probably will just replace cash with digital so-called currency. And that's a huge difference to what John was explaining before. So keep that in mind.
Thank you. So that concludes our first panel. Maybe as a conclusion, one of the maybe good effects will be currency competition out of COVID. Let's see. We will have a short break now, about 10 minutes, and after that we will meet you again. Thank you.